Markets still focused on big banks, or at least the end of big bank earnings. Earnings out this morning from Bank of America, Charles Schwab, and BNY Mellon. And traders hoping for a reset after an abbreviated trading week due to the Easter holiday last week. For a read on what we've been seeing in terms of market reactions to bank earnings, we turn now to Gerard Cassidy, RBC Capital Markets large cap bank analyst. Good morning, Gerard. I think as I look at Bank of America and look at some of the other banks, there is this sort of balancing act that we were talking about earlier in the show between perhaps slowing economic growth and the pinch of inflation, maybe hurting consumers, but on the other side, banks benefiting from higher interest rates. How do you think that balance is going to play out over the course of the year?
It's an interesting question because you're absolutely right that the rise in interest rates will clearly benefit the industry's net interest margin. We've seen that so far this quarter. And as you might recall, the Fed only raised rates in the middle of March. The bigger rate increases are yet to come. And Bank of America this morning indicated that they will see a very significant increase in their net interest income in the second quarter due to these rate increases that are scheduled for the months of May and June, on top of what we saw in March. On the consumer side, the consumer remains very healthy. They're not drawing down as much on their credit cards as they've done pre-pandemic, but spending is up sharply in the debit and credit card area. And I think what we're going to see is that consumers, as long as they maintain their confidence in the economy, should actually be a pretty decent area for the banks in 2022.
And so, Gerard, to your point, Bank of America releasing $362 million in reserves in the first quarter, which is lower than its prior release. Do you think Bank of America then is being conservative enough with its reserve management?
Loan loss reserves are a critical part of managing a bank's credit outlook. And these loan loss reserve releases were very abnormal. And it all came about because you might recall during the pandemic, early on in the first and second quarters of 2020, the industry, including Bank of America, set aside billions of dollars to handle credit losses that they anticipated. But because of the Federal Reserve's actions and the federal government during the pandemic, one of the outcomes was we didn't have a credit cycle. As a result, all that money that was set aside was not needed, and the banks are bringing it back into net income. We think it will end this quarter. Going forward, we expect to see all the banks building reserves, which is a normal trend to take. But what's interesting this quarter, there has been a divergence. Some of the banks have already started to build, like JP Morgan Chase, Goldman Sachs. Others have not, similar to what you heard from Bank of America this morning, because they have a different mix of business. The domestic-oriented banks don't have the same risks as the banks that are global, like a JP Morgan and Goldman Sachs.
Gerard, let's zoom in on JP Morgan. We didn't hear that much from CEO Jamie Dimon on that last earnings call. Now, they have a key investor day coming up next month. Dimon has been under fire for how much he is spending to invest in technology. Do you think that May investor day is the time where we finally get a clear-cut succession plan from the company?
It's interesting. Jamie Dimon is one of these CEOs that is very passionate about what he does every day. He's got a very strong work ethic, has no interest, in my eyes, in retiring anytime soon. And as long as he remains healthy and very viable, we don't expect him to retire anytime soon. You look at many of the leaders of this country and look at their ages, and he's obviously nowhere near those folks. So I would say that I don't anticipate them coming out with anything specific on that. But what's also interesting, and I'm glad you brought it up, because look at all the ex-senior JP Morgan officials that are running other companies. They have a very deep bench, and we are certain that when the time comes, they will certainly have the right person to step into his role. But we don't see that anytime over the near future.
But is it time, just to push back on that, Gerard, isn't time that at least he signals who his successor could be? Perhaps he goes into that executive chairman role, because to your point, he has lost a lot of great executives that are now running very other large companies.
Well, If he didn't deliver for his shareholders, I would totally be in your camp. But as you saw in his annual shareholders letter, ever since he's taken over the helm of Bank One, which merged into JP Morgan Chase, and then taking over JP Morgan Chase, his stock has outperformed all the major bank indices, as well as the S&P 500. So here's an individual, Jamie Dimon, who has delivered for shareholders. So to ask him to step aside just because he's at a certain age, in our view, really doesn't make sense. Now, granted, he's going through more challenging times today because of the global uncertainties, but because of his success in the past and his leadership skills, we expect him to navigate through these times like he has in the financial crisis in 2008 and 2009.
Now, JP Morgan has performed very well under his leadership. I was just looking at Bank of America versus JP Morgan over the past year, and Bank of America has actually done better, at least in that more narrow period of time. Between the two banks, what do you prefer to own right now? What do you think is a better bet?
We're steering more investors to Bank of America, and the primary reason is that they're a much more domestic-focused, large bank versus JP Morgan Chase. We think the U.S. economy has a much better outlook than the global economy. And Bank of America has done an excellent job under Brian Moynihan's leadership in digging deeper into the consumer banking business here in the United States. I would argue that they probably are not only our largest, but one of our best consumer banks in the United States. And therefore, the stock still trades at a discount to JP Morgan Chase. And we think this is a better place for investors to own a bank stock, a large one. We would go with Bank of America over JP Morgan.
Duly noted. Gerard, Cassidy, RBC Capital Markets, large cap bank analyst. Always good to see you.